Good afternoon, everybody. Usually when I present, people always look at me because I'm the food lady and they ask, where's the food? I don't have any food. It's coming, and I think that the timing was set just right. So I'm going to talk to you about the latest and greatest when what has been going on with the food and nutrition department in each of your school districts. This is our team. If you ever need us, this is us. Emails, you can email, or I have almost everybody has my cell phone and they text, and I'm available at all hours. It doesn't matter. If I'm into Netflix and I'm binging, I will tell you I'm watching my show. Please wait till later. Let's see. Okay, so we're going to talk about financial report first, which is a submission update. Financial report for CMP is due every year. This is done every single year, but every year, Child Nutrition Director is shocked. What? Yes, it's that time again. We have to do this task. And it used to be submitted inside of Texas UMPS, which is the website that houses all of this. But like any software, it requires a job order, requires an update. So what TDA has done is they have created a JOT form for submission. So you receive an email with this JOT form and it's linked to the report. The report this year was very unique because we in Child Nutrition received all kinds of funding, and it was very different, and it was not related to breakfast reimbursements, lunch reimbursements, or snack or anything like that. But what we did is we provided technical assistance and training to Child Nutrition Director beginning in January. In February, during one of our FACs, we provided a blank template. We provided all the links to find the funding that you received outside of reimbursements, which was emergency operating costs, supply chain assistance, pandemic EBT, any refunds associated with warehousing for USDA foods. And it was a lot. So, people had to really get in on this stuff. There was also a list and webinar series of preparing the report. What is it that you have to have with you, which was a lot of support from business office, and also your general ledger and any other information related to grants that you might have received throughout the year. I wanted to make a special note because of the pandemic and because of everything that we did in the recovery and coming back to pandemic. The report has the different revenue types. Everybody in the room and in Zoom is familiar with these. You've seen these numbers, right? Not yes. I know you haven't eaten yet. You have seen these numbers. So for the most part in Region 1, almost every single district reports the revenue for child nutrition under 101, right? 101 and 240 are almost identical. They mirror each other. We're in agreement with that? The 242, that special revenue account, that is for districts that run summer food service program. Very minimal districts. I think the last one still standing that continues to do summer feeding under that 242 is probably Roma. United ISD and Laredo ISD were running SFSP up until last year, and this summer they are going to be running Summer Seamless Option. Summer Seamless Option is an extension of the National School Lunch Program, and that is what the state recommends and highly encourages districts to run a Summer Seamless Option. SFSP is a unique program that is intended for sponsors, people that do summer camps where kids spend the night. And even though there is a little bit of additional funding in that side, it comes with a lot of strings attached, okay? I think there's an extra 40, 50 cents per meal, but that is intended to go to cover administrative costs. You cannot move money in and out from that account. Like that's kind of locked because it is related to summer feeding June, July, August, and you're done. So you don't run for profit. And so at the end, you need to kind of disperse those funds into the improvements of the child nutrition program. And the reason I mentioned the different accounts is because there was a lot of confusion during the pandemic when we used the flexibility to serve National School Lunch Program under community feeding, which was summer. So a lot of districts went and created, or they posted money in 242, or they posted in 101, and they went and they woke up 240 and they started putting money in 240. So when it was time to do financial report, well, we have over here, plus we have this one, and hold on, let's go back. And so there was a lot more of accounting that needed to happen. Okay. But it's all sorted out, and we made it. The deadline is today for the financial report. I only have 3 districts that I am on the phone calling them to see what the holdup is. The original deadline was March 31. In all of the trainings, we told food service directors, do not go on spring break until this report is done. Do not. And guess what happened? Everybody went. And then when we came back, we did not advertise that the deadline had been extended because we're tricksters like that. So we tricked everybody. We told nobody that it got extended, and you still waited. So then you received notice that the deadline was extended, and guess what happened? Still waited. So the state is not going to give anybody feedback or any kind of confirmation until all the reports are submitted. And that is 1,200 districts that are pending the report, right? Once all the reports are submitted, they have a team of 2 people that are going to go through them and check them for accuracy to see if they look right. What are they checking for? That your ending balances match what you reported to TEA. They're checking that those balances match the J2, right? And that it was done accurately, and that you don't have excess fund balance. If you have excess fund balance, the state perceives you as a for-profit entity, right? You have 2-3 years of for-profit, and they will take your nonprofit status. They will freeze your account until you spend down all the money, and then they will turn back on the reimbursements. Nobody's in that situation, but I do need to add that layer of scare tactic to make sure that we don't have winter squirrels out there that are saving the money, because I don't know, something bad's gonna happen. You cannot have more than 3 months operating on hand. You cannot. Otherwise, they think, oh, they're running for profit and poor kids. There is a piece inside of the financial report where you need to disclose what you received during the pandemic for additional funding outside of reimbursements for lunch, right? These were they were a gift. Here you go. We know you've been struggling. It's been hard. So what happened to my mic? Okay. So here's some funds, and they are associated with emergency operational costs, which was EOC, came your way. Pandemic EBT local level funds, and PEBT local level was assistance money for the PEM side of the house, where you had to do reporting and uploading of reports. And so they felt that work needed to be compensated. So if you needed a printer or you needed additional resources, they gave the districts a little bit of money, right? Then there was a contracted warehouse private storage rebate or refund. So all the districts pay out to store the USDA foods in a statewide warehouse. And those fees, the state decided to absorb the fee themselves. And so the district received a rebate or refund related to that. Then you had equipment grant, and then you had supply chain assistance grant. This one was big. Some districts got like $1 million. I mean, they got quite a bit of money. Do notice that inside of the financial report, it does have the ALN number, formerly known as the CFDA. So we all are aware that CFDA evolved to be called something else, right? So don't call asking, what's my CFDA? Where do I report this? Because it's now called assistance listing number. This chart right here, the A, B, C, D, E, they are not duplicated numbers. So you need to disclose these grants, but then you also need to add them into the revenue side of the report to make sure that everything is being reported accurately. The trigger is the net cash resource. Like I mentioned, if you ended up in excess net cash resource and it's an auto pop based on the entries, then you need to describe how you propose to spend down this money. So usually there comes a plan to reduce excess fund balance, and directors will complete this by saying, well, I'm going to buy some needed equipment, serving lines, skillets, and things of that sort. Some districts ended up in a lot of excess to where I don't think you're going to be able to spend down in one fiscal year, because remember, up to now, all the presentations have been pretty consistent with supply chain issues and manufacturing. So if you wanted to buy, say, a skillet or a serving line, those things are taking anywhere from 3 to 6 months. And in the previous year, when we had the big pandemic stuff, they were taking a year and up to 2 years, right? Not completed as of 4/26, 1 o'clock in the afternoon. I know I'm doing a little bit of shaming. Sorry for that. I'm doing a little bit of shaming. As of 4/26, 1 o'clock, these districts had not submitted the report. And I presented it to the directors at yesterday's meeting that we had. And they all kind of threw shade about, oh, Carmen, you're shaming us. I told you not to go on spring break and you went. So right now, we only have 3 districts that are not submitted. So these guys went after they left our meeting yesterday and they hustled. They finished the report and submitted. So for the most part, everybody is done except 3, and they're the small ones that I need to call out. And small ones, remember that the CFO usually wears the 20 hats. Like they're custodian and they have to go balance the books. So that's that on financial report. The 3 that do not submit today by 5, they're going to receive a corrective action document or a CAD from the state on behalf of the state. Administrative review, procurement review, and financial review updates. The administrative review, we are finished with that season. Praise God, that got weird. Like any entity, the state had also a lot of vacancies, a lot of new people, a lot of shuffling. There was a lot of changes. So some of these reviews were being conducted by staff, seasoned staff, and then they retired and they hired a new person, and then they hired a consulting group to come in and take over and finish up all of these reviews. What you need to know is that in our area, everybody did very, very well. There were on average about 3 to 5 findings, but they were areas that were just like little knickknacks is what I call them. And they were related to civil rights. There is, and you should know that for federal grants, civil rights is a very delicate thing. And the reason for the civil right finding was because the poster that has to be in a serving line is being updated because of a new law to identify another group that belongs inside of the civil rights for discrimination. And that poster is not going to be printed until the end of September of this 2023. So if you didn't have the right poster, or if you didn't have the right verbiage, they were gonna get a finding. There was a meal component. The number one, and one that is related to you, there was a lot of findings in the area of non-program food revenue. Non-program food revenue is a la carte, snack bar, sales, adult meals, or adult meal pricing. My guess, my humble guess, is that the reason that we were not being in compliant with this component of the review was because districts received so much revenue aside from reimbursement that the non-program is a proportion of revenue. So you had this big bucket of money and you're charging, the $2 for the bottle of water. So they were saying you didn't charge enough, right? So your revenue is like way up here. And as a proportion of your resale, you're supposed to mark it up. So technically during COVID, your bottled water should have cost $5. Does that make sense? I know, but nobody was going to go and touch those prices because we were going to come back to normal anyway. Procurement procedure handbook was missing altogether. And we've been doing procurement reviews for several years. I want to say like 7 or 8 years. So we've gone through 3 cycles of reviews and we still can't seem to get it right. So procurement procedure handbooks, if you have a friend, a partner, somebody in another district that has a nice handbook, steal it. And then replace all and put your name on it, or don't go into an audit with no handbook. Or the handbook was missing elements like the Buy American provision or something as simple as thresholds. I can tell you the districts that did not, well, what's your threshold? What do you mean? Oh my God. So they were missing thresholds, meaning you didn't establish the micro, you didn't establish the small, you didn't establish the formal. You might have it might be inside your head, but it was not annotated inside of the book. and therefore you got a finding. So we do a lot of therapy where we work. The state is moving on to a 5-year review cycle, which is fantastic news. So finally, we get to kind of relax a little bit. In our area, we were getting about 18 reviews a year, which is crazy. That means I was always on the road, and I have to visit you on site 3 times before your review to be fair, to give you, you know, a good assistance and training and preparation. Going to a 5-year plan means that they have to review, there's 1,200 districts, right? So that means that now there's a different schedule. These districts that I have up here, which is Los Fresnos, Santa Rosa, Sharyland, Webb, and Weslaco, they were moved for next year because of this 5-year cycle. Next year is year 1 of the 5-year cycle. So we have 1, 2, 3, 4, 5 districts. So I'm going to be like on super relaxed mode. I'm going to get a chair, get the coffee. However, the state has said that USDA mandates how many reviews and that they're asking that they do a minimum of 300 a year. So that means that this is a very liquid, very fluid list, that there could be more districts added to the list to meet that part. So these are the folks that are going next year. That also means that this year, this 22-23, is your sample year for financials and your sample year for procurement. So if you don't have that handbook, you need to start typing. CFP at risk AR, that is the after school snack and the supper. That is a totally different side of the house. It is very, very complex, and they are like a distant relative of the National School Lunch Program. They operate under totally different guidelines. So this is a list of districts that were supposed to be reviewed under CACFP for suppers. These reviews are unannounced. They are also abbreviated, meaning that if you did not receive an administrative review for National School Lunch Program the year before or the year after this review, then you get a comprehensive. You don't want comprehensive. It's very complicated, and they ask you for a lot of very strange things. And so what they do here is they go do a meal observation. They ask for a couple of documents, and you're good. You're good to go. So all of these folks are in there. I do not know the status because there were some that were done ahead and after. So I'm not really sure that we're completed, but the ones that have already been done have done very, very well. SCA third round, you're getting additional funds, supply chain assistance. Right when we thought, yeah, please stop sending money. We don't want it. There is nothing free about free money, right, CFOs? There's nothing free about free money. Everything comes with strings attached, reporting and so on. So what we did in our office is we condensed the list statewide. We sorted by our districts and we listed here to the best that we could, because this was not an easy form, an easy sortable form. This is the award amounts per district. Okay, so this PowerPoint has been added to the website for a resource. And here's the second page. So it goes all the way down to Zapata. And just as an example, Zapata has been awarded $32,135. We'll take it. Don't decline it. Inside the resources, you have the frequently asked questions, which tells you how to manage the money, where to post it, how to use it. But most importantly, the deadline for the attestation is May 5th. So next Friday, your child nutrition director needs to fill out the attestation to draw down this money. It's not automatic. You need to go and say, yes, I want it. And inside the form, it says, if you want future or additional, you want us to just send it to you, or do you want to keep filling out an attestation? And so I recommend that just click yes, let them send it over. Affordable connectivity program. Who knew about affordable connectivity? Anybody here? Yeah, here. So TDA sent an email out in March regarding the Affordable Connectivity Program, or the ACP, and how it impacts schools that are community eligibility provision. So it turns out that if your child attends a school that is CEP, then you can apply through the FCC to receive a credit to your internet service. And that credit is $30 a month, right? So what you do is you go in and apply at the FCC, you get a case number. It's all done online. It's through jot forms. You go in and apply, you get a case number, and you call your Spectrum, your AT&T, and you tell them, hey, I just got this. And you give them the ward number, and they claim that they handle it within 2 months. So I have staff and I have colleagues out in the school districts that have already done it. And they said, oh yeah, I've actually been getting the credit for almost like 8 or 9 months because they knew ahead of time. So the FCC did receive large amount of money to make sure that kids had connectivity during the pandemic. And there is a lot of money that has gone unclaimed. The benefit in this rebate or credit is good until the funds, until they finish the funds. There are two things that you're going to need, which is the proof of enrollment, like a report card, and also proof that the campus is CEP, because you need to verify, you need to upload that. So a lot of school districts that are Provision 2 or CEP, they produce a letter every year because kids either need a waiver for summer school or they're going to participate in some kind of football program and they need income eligibility information. So they go knocking on CMP and they ask them, hey, I need that letter, which is a media release saying we're a CEP campus. So they have it standard ready to go. The only difference with this, the ACP or the connectivity, is that you need to see the school that your child goes to on the list. So CNPs were trained and told yesterday, if somebody calls you to request this letter, you need to make sure that you state, yes, we participate in CEP, and here's the list of schools that are under CEP. In the case of Sherryland, 5 schools inside Sherryland are CEP, and the others are traditional and take lunch applications. So if those children that are on free lunch or reduced lunch, you would get a copy of the lunch application or verification, and then that's what they would upload to get the $30 credit for the $30 benefit. I think that also has another a one-time $100 discount off of a laptop, tablet, or computer. So if you have kids in school, you know what you got to do. Indirect costs, everybody's favorite. Who's ready to hear about indirect costs? What are they? I'm going to go through this one really quickly because I just have just a couple of advice for you, right? That we need to get it right. You need to do the calculation correctly. You don't want to get it wrong, because during an audit, if they find a miscalculation, the state will reclaim those funds. They will ask you to reverse the charging of the cost and place it back into the CNP. Indirect cost regulation is covered under 2 CFR 200, 7 CFR, and also the SP 60 2016, which is a memo by USDA that was published September 30th, 2016. And that is inside of your resources. It's 107 pages. It's an excellent read. And then there's also more information on financials inside of the TDA ARMS section 16. Direct versus indirect. So I think we all know what constitutes a cost that is direct, is incurred specifically for a program or other cost objective and can be readily identified to a particular object, such as a school food service, right? The cognizant agency, we all know it's Texas Education Agency. That's the single agency that negotiates this. And this is an annual request process. You don't have to do, I mean, yeah, you send up your plan with all of your financials, and they are the ones that come back out and give you, here is your rate. It's already published, right? During reviews, TDA is asking, well, how did you calculate this? Because that is a totally separate agency and state agency than that from TEA. So they do need a little bit of education, or they're testing your knowledge. You know how the audit world works. The steps for indirect costs, again, these are the things that happen, but this is not on your side because you wait for TEA to publish these rates and they determine what it is and they send it back to you. This is taken directly from the guidance that is uploaded in the website, that 107-page guidance booklet that I provided. And it just says that you need to identify all the costs, then you identify which ones are direct and indirect, right? In child nutrition, you need to remove all these excluded costs, which are equipment, purchases, capital expenditure, payment to contractors, food costs in the school food service, renovations, alterations, and certain unallowable costs like fines, penalties, and etc. To calculate your indirect cost, well, this is related to child nutrition. So you know that you get an indirect cost pool, and there's a modified total direct cost base, which equals the indirect cost rate. But again, this is work that happens on the TEA side. By the time it comes back to you, you just have your unrestricted and your restricted. So can districts use either the restricted or unrestricted indirect cost rate percentage for school nutrition program? Yes or no? Can they? If you were a state employee, you would say, it depends. All right. There is something, so yes, you can use one or the other under certain circumstances, and you need to be consistent across the board, right? Whatever rate you use, it needs to be consistent. So if you decide to do the unrestricted, then you need to have other grants that have the unrestricted rate allowable and charge them the unrestricted, right? So if you outline all of your grants and everybody's being charged restricted, but CNP is unrestricted, TDA is going to throw it back at you and say, no, you need to do the restricted. So that's what they mean with the consistent application or the use, right? The restricted or unrestricted, which should we use? And this right here is guidance based on 2019. So bear with me. The restricted use if the grant fund specifies supplement, not supplant. And the unrestricted, it use it if supplement, not supplant does not apply. So that test that happens, we can just make it simpler by saying, we know that of all of my grants, it's already been determined that I can only charge the minimum. That means that you are now blocked out of charging the maximum if you don't have any grant within your possession that allows you to charge the maximum. Does that make sense? So all of you are very fair and you charge what they, right? A fair rate. In the application of the indirect cost rate for SMP, this is the part where some districts might get into some murky water, right? Determining. So you must remove distorting items, and they are identified by equipment, payment to contractors, food costs, and renovations and alterations. So you don't apply the rate on all of the expenditures. You only apply the rate on those items that are allowable, less distorting. And there is a template that we created at Region 1 inside of your resources. And that template is an Excel spreadsheet. It has formulas. You go in and you plug in all your account numbers, and then it'll say the less, and then you can apply the rate. Okay, so it'll give you what you should be charging. The documentation for indirect cost rate is the agreement, the plan or proposal. Some people get shocked. What? Well, it's a big. The TDA asks you for it. You need to, if it's a large file, you need to figure out a way how to get it to them. If email doesn't work, if putting it in a Google Drive, linking it, this is what I submitted to TEA. That's what they're asking for. The approved indirect cost rate, which is the documents that are uploaded in TEA, you can download the whole thing, or you can screenshot where your district is at and where the year's indirect cost rates are published. Financial documentation demonstrating consistent treatment of indirect costs. In an audit that we had this year, the auditor accepted a screenshot from the CFO where she had all of her grants and the rates. So that's acceptable if you screenshot what everybody is doing. I do want to note that from one school district that I worked with, they said the only federal grant that allowed for the max rate was ESSER. Is that right? Is that true? And ESSER already finished? Not yet? You still have ESSER? All right, then I guess we're good. When in next year, if you do not have any other federal fund that allows for the max, child nutrition cannot be charged the max. Okay, child nutrition cannot be charged the max rate if you're not charging somebody else the same. The consistent treatment applies. All expenditures in child nutrition programs must be reasonable. We all know this because this is a federal thing, allocable and necessary. You must provide proof or methodology, adequately documented and treated consistently. A lot of times school districts or child nutrition directors will ask us, well, what do I write here where it says the methodology? How is it allocable? How is it reasonable? And I refer them to the purchase order compliance form that we have here, Region 1. So to buy office supplies, we have to complete this entire 10-page, I don't know, Romalda, how long is the purchase order compliance form? The one that we fill out at Region 1, it's like 10 pages to buy office supplies for $25, and we have to go in and check off. So if we do that for a purchase of $25, certainly you can answer the question on what is reasonable, allocable, and necessary, right? Which is the test. Capital expenditures inside of Texas UMPS is now asking for verbiage, a couple of sentences on how the purchase meets the child nutrition needs and also the cost basis and methodology. Successful implementation of indirect costs. These are determined in advance. They are agreed upon, right? They're not a surprise. We don't wait until the end of the school year. Oh, you know what? I forgot to charge you. Let me charge you. So it has to be done during budget time, which is right now. You're already working for next year. Cannot change it throughout the year. And it's a partnership between business office and CN. Do not surprise these folks because they have kids to feed and they have equipment and stuff breaks down. So you can't spring on them, hey, you owe me $2 million. So you have to treat it with a lot of care. Oh, also on number 2, it says you need to reconcile only after the service has been provided, meaning that you cannot charge it in advance. You have to wait. So a lot of time, if you're in budget process right now and you already know that you're going to charge indirect cost and it's like 4%, you know that you're going to do a placeholder where you're going to budget for this, and then you're going to wait until either the year closes out and do the calculation and post it, or you can do it on a monthly basis. I don't like the monthly basis because I just feel like there's too much room for error. That's just the way I think, but it's up to you how you want to do this. And that's it. That's all I have. It was super painless. Any questions?